Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about the question and answer session. Today is the time for question and answer session, so let's get started quickly. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. So before the question answer point, I want to point out how the market has been doing, and we can do a small market talk as to where it could be headed and what it did last week. Nifty tried to make 52-week high but failed, so it went to 12,030 or so, and it looked like it's going to take out the 52-week high of 12,120-130, but it could not, and it reversed its trend and has closed below 12,000 and closer to 11,900 or so, even went well below that. What it entails for me is that it's trying to make a double top, and from there we could see a major correction in the Nifty. I've been saying that over the last 1 month or so. It has not happened, and people might be thinking that I'm a fool and whatever I'm saying will never happen, and Nifty is headed for 13,000. But remember that it is trading at 27 times FY20 earnings, which is extremely expensive, and nobody will tell that. Everybody I'm watching on television, on CNBC, ET Now, or any other channel, they are telling that Nifty is trading at 22, 23 times or 21, 22 times, which I find perplexing, because it is not like that. Because if they need to tell it as to which year's earning they are talking about, because FY20 earnings would be at max 460 rupees, and at that level, at 460 rupees, this market is trading at 26, 27 times or even more than that. So taking into consideration that the market is trading at 27 times, this looks extremely expensive, and we could see at least a 10% correction. In my opinion, a good 18-20% correction in the Nifty over the next year and a half, that is in 2020 till mid of 2021 or at the end of it. We could see some stocks go up even in that correction, but majorly the Nifty will correct. That means the major component of the Nifty, the mega caps of the Nifty, will correct between 10 to 15%, and that would be the time to invest in these companies rather than buying them at the top and then reviewing it over the next year or two, just like people have done in the case of small and mid cap when it made its its highs. Talking about further stocks that we were talking about, we see that the small caps have shown extreme resilience over a period of time. That the small cap index has not really fallen that much over the last couple of weeks. It has shown resilience, and even though the Nifty fell, the small cap was sideways. The mid cap did fell, but I'm looking closely at the small cap market. When I suggest stocks in the multi-bagger picks, they are more or less in the small cap division, and around 13,300 to 13,100, the index is finding a lot of support. And remember that its high was 20,200 about 2 years back, and from there on in it is already down 35%. So from the top it is down 35%, and from the lows and the highs, the downfall has been 40%. So the index has already fallen 40%, and I see that the correction in the small cap index is about to be over, and I'm seeing that the prices are troughing out. It is not the case in which that the stocks would keep on going down and would go to zero. Many stocks have already fallen 80-90%. They won't fall 100%. So there is always a bottom, and I think the bottom is being formed in the small cap index over the last 2 to 3 months, and it takes time. It doesn't happen like immediately. Similar to what is happening with Nifty, that is not able to take out the top, and it is taking a lot of time for it to take the top, and eventually, in my opinion, it won't be able to do that, and the fall will begin on one fine day. The index would fall something like 2 3%, and then the fall would continue. Similarly, small cap index might find some trigger, might find some news in the real estate, infrastructure, or some government incentives that would lead to, or even results that would lead to the index going up to 3% even in the downturn of the large cap index, and then the move will begin. So that's why I'm trying to tell you that buy companies which are good, really good, strong, and also having reasonable price, rather than buying something which is very good but at very expensive prices. So keep that in mind. So the tide may be turning for small caps, and it will take maybe another couple of months. It won't happen like from tomorrow, but it will take 2 to 3 months, and then we could see another huge rally in the small and mid caps. Coming to the question answer part, first question comes from Tirthankar, and he wants an opinion on Sant or Cient. Well, Cient is a very good stock to buy it, and probably IT index will not show the kind of form that it had shown in early part of 2018 or throughout 2018. What I suggest is you buy incrementally into Cient, and if there is no corporate governance issue, and if the numbers keep coming the way they are, probably eventually you're going to make good amount of money into it, but don't expect to make say 100 200% over the next 3 4 years. Probably expect compounding 14 15% into any IT company that we are talking about. Another question that comes about is on SJVN, and Mathivanan wants a video on SJVN. Sure, Mathivanan, in the coming few days or in a couple of weeks, you'll get a video on SJVN for sure. I'm trying to put up videos immediately when the viewers are asking for it, as quickly as possible. Sukuma Export is a query by KTSN. I will go through Sakuma Export for sure over the next week or two, and put up a detailed video on it. So kindly stay tuned. Analysis on Apollo Hospital is required by Dr. Prasanna Suru. Uh, Apollo Hospital is a very good share, and I'm going to do a complete, thorough, you can say, fundamental analysis of Apollo hospitals in the coming days or so. But to tell you in a nutshell, it is a very good company in the hospital division, and it is coming out of a lot of wranglings in the management and the corporate issue. I mean, there have been many issues with regard to how the restructuring is being done at the corporate level. So you have to go through all the nitty gritties and then invest into it. There have been talks of the way they have handled those restructuring, and people are not, or investors are not happy with it. So kindly go through that. I'll do that as well, and then put up a video. Unless you go through it and know about the fundamentals, do not invest immediately into the stock. Uh, so CH Kalyan, actually, I'm sorry, CH Kalyan has asked that he has 200 shares of Aurobindo Pharma. What should he do? I want to know what is your buy price. If your price is very high, I suggest that wait for any positive news in Aurobindo Pharma and add on to it, or even on very low levels you can add on to it, because it is a very large cap pharma company. And although there have been a lot of observations, but over the next couple of years or 3 years, I feel the stock would again find its mojo. So you have to wait till 2 to 3 years. So coming to more questions from the viewers, we have a question from Ramjes Razak. about a video on fine organics. Well, sure, I'll analyze the company in detail and put up a video in the next couple of weeks. Kindly keep in mind for all those who's putting up these queries that it's going to take a while before I put up these videos, because there have been a lot of queries about other videos as well before. So I'm trying to go synchronically in order to put up these videos, so that no one is left out. And even if somebody has put up a query say about 3 weeks back, he's going to get some video or the other on the stock that he wants. So kindly keep that into consideration, and if I miss out on any of the stock, kindly put up your request again. uh, uh, Rajesh Rekhar TV has asked about detailed video on NCC and its future prospects. Well, Rajesh Rekhar, I believe that NCC or Nagarjuna Construction is a very good company, but in a very difficult space. I will put up a good analytical and comprehensively placed fundamental video on NCC, sure, and then you'll understand that probably this space is not quite the one to look at. Rather than this, you can look at ancillary plays. So you can look at housing ancillary plays rather than buying the housing company in this environment. Uh, Now, there's a question from Tirthankar. Do you think GNA Excel, Motherson Sumi, Subros, or Jai Bharat Maruti is a better bet at this moment compared to Bharat Forge? Now, interesting point is, although Bharat Forge is into ancillary space and heavy vehicles, it is also into defense, and it has a good amount of defense exposure. So I do not consider Bharat Forge similar to Motherson Sumi or a Jai Bharat Maruti, which is a you can say a subsidiary of Maruti itself. GNA XL is really good on its part itself. Motherson Sumi, with its European and US exposure and the way they are tied up with large and mega the car companies and vehicles, or you can say retail vehicles. I call it retail vehicle or consumer vehicles. It has its own niche. So both Motherson Sumi and JNA Excel in itself is pretty good. Uh, and I have put up videos on GNA Excel before, so you can go ahead and watch that as well. But Bharat Forge is in a different league altogether, and a more stable stock than these two, with a more stable management, I suppose. So you can buy all of them if the market turns around. That is the thing. If the auto market turns around, so I'm saying that you can buy auto companies, auto ancillary companies over the next 18 months. Even something like Ashok Leyland may again fall to 50-55 levels easily. So keep that in mind. So buy these companies over the next 1.5 years, and then you'll reap the benefit, because then the turnaround will come. It is a cyclical slowdown that is taking place in the auto and auto ancillary segment. Malika Arjun Achar has asked that he has Rain Industries for 1 year, since 1 year. What needs to be done? I believe that Rain Industry is now going through a fundamental problem. Unless they change their business, they are going to be in trouble for the next couple of years, because of the restrictions on the import products, or the products that they import in India. Restrictions put up by the government. It's going to make it very difficult for Rain Industries to have the same amount of profits as it was having 2-3 years back. And hence they would make profits, they would do well, their business is not bad, but because of their raw material being so expensive now, because of the duties, etc., Rain Industry might struggle, because they are into the chemical business, and their raw material cost has shot up incredibly. So if you have bought it at a very high level, wait for sharp movements upwards to exit. If you have bought it at low levels or around the price that it's trading at, then probably you can trade into it rather than invest into Rain Industries. Uh, Javed Iqbal wants a video on Nitin Spinners. Sure, Javed. Next week I'm going to have a video, maybe tomorrow or in 2-3 days' time, a video on Nitin Spinners. And this stock is very close to my heart, because this is one of the earliest stock that I bought during 2012-13, and it reaped me very good benefits of 2 3x. I bought it something around 26 27 rupees, around 25 26 rupees, when hardly anybody knew about it. It shot up to 70 80 rupees, around 65 70 rupees in that one move, and then again corrected. So a nice stock, but it is going through a lot of trouble in the textile industry, and that's why not producing profits at a rate that it should have, or it promised in 2014-15, and that's why the stock is struggling. But I'll put up a complete detailed video soon on Nitin Spinners. uh, Now, Sanjay Mehta has asked for a video on Berger Paints, ICICI Bank, Tata Global Beverages. I'll put up a video on Berger Paints as well as Tata Global Beverages. For ICICI Bank, you need to wait because I need to analyze what all went through with the Chandra Kochar issue and many other things. But Berger Paints and Tata Global Beverages for sure. Tata Global Beverages is a very good share, and I remember I put up a video on Tata Global Beverages more than a year back or something like that. But if I have not, I'll put up a video straight away for sure. In case of Berger Paints, I suggest that again, I think you're making a mistake that if Asian Paints has run up so much, so Berger would also do well, and so on and so forth. That doesn't happen often. So buy the best in the business always. But I'll sure put up a video on Berger Paints soon enough. So this was my video on the question answer session. For all the questions that have come in over the last 1 week, there have been questions about the portfolio. Kindly send me an email when you have a portfolio query. For a nominal amount, I'm going to help you with your portfolio queries as well. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.